U.S. gold futures jumped to their highest level in more than half a year following the results of the Crimean Referendum. But this Monday morning, we're having some pullback. Here to talk about the metals movement is Rich Ilczyszyn. He's a trader with iiTrader in Chicago. Rich, good to have you back.
Thanks for having me, Daniela.
We had an interesting open this morning, Rich, following the referendum last night in Ukraine. No one really surprised by the results. Are you surprised by gold's movement?
Well, listen, it was an interesting open. Last night, we got the news that 97% of the polls taken, the exit polls, confirmed the referendum that Crimea wants to be part of Russia. We open up at 92 and then sell off a bit. And currently, we're down well over $10 off the highs. And really, it's a bit interesting here because the market, I think, is getting a little ahead of itself. Support really comes in at 1,200. We know that. Turn of the year, investors started flocking to gold as that double bottom holds, the 1180s. This was the catalyst to get us to the next leg. However, I think short term, we're reaching a little bit overbought levels. We wouldn't be surprised to see the market come back, but that's really good for stabilizing prices and good for long-term investors because you're going to get another chance to buy in. I wouldn't go chasing the highs up here at 1392. Be patient. I think we get a pull back into the 60s and 50s even there where you try again for the long side.
So, Rich, what are some key technical levels that you're looking at?
Right. Previous breakout high, 1362 is now support. Below that, 1350. Below that, 1325. Those are all value areas. And take a look at the RSI, the relative strength index for you technical guys. If we get close to 80, we're going to signal a short-term top. I think the upper end of this range is going to be around 1425. So any pullback, I'm still a buyer because the uptrend is still intact.
So now, Rich, our attention has shifted to Wednesday's policy meeting at the U.S. Federal Reserve. Can we expect any surprises here?
Well, in the last 4 or 5 FOMC meetings, they're getting more and more important. Now that we have a new Fed chair, we have to see how she handles the situation. But most analysts predict another $10 billion pullback for taper. So essentially, I think that's going to put more headwind into gold. But really what you want to watch here for gold traders is interest rates. The key interest rate, the 10-year note. If 10-year note yields start to creep up, that's going to put a headwind on gold and put pressure to the backside. However, yields have been somewhat subdued. I think that's what's given the green light for gold in this area.
And Rich, last question. Following the vote last night, it seemed that gold was drawing a safe haven bid. Is it indeed acting as a safe haven now?
I would say so. The higher that the equity prices go without a pullback, the subdued nature of the 10-year yields, I think gold is acting like a safe haven here. There was no accident as this story started to break and unwind last week that we saw that catalyst give gold higher prices. So yes, I think this is a safe haven trade. Actually,
Rich, last question. I bluffed you before. Thoughts on silver?
Silver's a follower. We call it the redheaded stepchild of gold. And essentially, as long as gold stays bid, we think silver will stay bid as well. Next level, roughly 22.20. A new high above that, we probably extend another $1 or so. But we need gold to do the same. I think the upside range for gold is around 1425.
Thank you, Rich. Happy Monday. Happy trading. We'll see you soon.
You too.
And thanks for watching this edition of Kitco News. Email us at newsfeedback@kitco.com or follow this conversation on Twitter @Daniela Camboni. Thanks for watching.